More now on the markets. They took a big nosedive at the top of the hour, fighting their way back up, but still on the decline. Here to help us better understand what's happening in today's marketplace is John O'Donohue. He's the head of equity trading at Cowen Co. John, two big headlines. One, the statements from the EU energy chief that there's the possibility of a major disaster in Japan, and now this latest statement that the Fed is canceling its scheduled purchase of treasuries today. What do you make of those two points?
Well, two things. First off, happy early St. Pat's to you, but I would say two things. One is, I think, obviously what came out of the EU is, I think, reflective of what's going on globally, is that all eyes are on Japan right now, and obviously all eyes are from a nuclear standpoint, are just wondering exactly how bad this disaster can spread, and that has the market on very much of a knife edge, and we can see the reaction within a few minutes of that announcement. Two, I think this Treasury announcement just came across the tape a minute or so ago is one that will take some time to digest. I think obviously the whole issue of the removal of QE2 at some stage, or the end of QE2, is something that the market has been anticipating. So I would really take a look. It's hard for me to say, I'm not in front of a monitor right now, how the Treasury market has reacted to this per se.
Well, we're seeing a 10-year note yield dropping down to just about 3.2%. So that was the immediate reaction there. Equities had dropped. The Dow lost about 100 points in 4 minutes' time at the top of the hour, and now we're seeing equities pair those losses. So relationship here?
Well, the relationship, there's two things. One is that obviously the tape or the market itself had gotten off to a great start in 2011. You had many of the prognosticators out there talking about a correction, and it had gotten too far ahead of itself. And obviously here was albeit a very sad reason, a good reason why the market should correct. The one thing I've noticed is that the market has not penetrated to the downside the closing print for 2010, which is actually a good sign. So I think, if you keep your eye on this 1255, 1260 level in the S&Ps to see if it actually violates that to the downside, that would be a bit of a bad sign. But I think away from that, obviously we've had so many different parts of focus throughout the last few weeks, whether it's North Africa, whether it's the union issue that's going on in Wisconsin, this whole issue of the European banks has taken an incredible backstep to everything else that's gone on in the world. So for all the bad things that are going on, the market has actually held in relatively well.
I mean, you're on what sounds like a pretty busy trading floor. What has been happening in those past few moments? Because it was a noticeable decline, 100 points in 4 minutes.
Yeah, well, I think it's like anything else. The liquidity, the actual liquidity that's in the marketplace is not as great as people would think, despite, some of the yelling and screaming that may go on behind me. But I think what's actually going on currently is, I would say, if you think about the large mutual funds and some of the hedge funds, many of whom are our clients, they're probably more sitting around right now. They're going through their wish list on the buy side, paring back positions that they probably thought should have been pared back over time. But I think if we look at the market overall, the market is basically of companies. And if you still take a look at companies in the U.S., you look at balance sheets, you look at efficiency, you look at profitability, you look at all these things, companies themselves are in very, very good shape. Economically, it's obviously a slightly different matter, right? You've still got unemployment at relatively high rates. The housing numbers today were not terrific. Having said all that, the market itself is digesting a lot of this stuff. So, you've heard this phrase, climbing the wall of worry. The market does tend to do that from time to time.
And I'm now looking at what is the official statement from the New York Fed about that decision to cancel the scheduled purchase of treasuries. All they say, auction was canceled. No detail, no explanation. So that's why we need to talk to people like you, John, to try to make heads or tails of that.
Well, I think part of the issue with some of this is that. And I don't know, it may be related to the Japanese central banks or whatever, but I mean, if you've got a level of participation from outside the country, so to speak, that may not be as up to speed as they possibly could be, that might be one of the reasons. I tend to doubt it, but you never know. I mean, you've got a lot of the outside buyers, whether they be from the Middle East. Obviously, Japan is a large purchaser in China. Right. That might be a reason. I don't know. I'm just purely speculating on that.
A large purchaser of U.S. treasuries, and that had led to some speculation as to whether that would be unwound. and bringing money home.
Perhaps.
All right, John, happy early St. Patrick's Day.